Hello, my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets.
Euro-dollar. A second bearish black crow yesterday, after the previous session's bearish black crow that was also an indecisive spinning top. That was right at the top of the recent market. Two things to note from this move. Firstly, the 50% Fibonacci line for 2023 at 108.64 continues to be a capping resistance, but only on a closing basis. Secondly, I've previously set out target X at 109.85. This was for the secondary hard to reach target with a small broken mid-January to late February bearish expanding wedge pattern. The high was at 109.80, which was just about reached. Overhead, we have the broken green highlighted lower bull channel line, currently at 109.81 of the October 2023 to late January 2024 bull channel. This has also acted as an overhead capping action. I'm still wondering if the market will now trawl along the underside of this lower bull channel line. Meanwhile, below, well, we have a fairly clear zone until the combination of the green highlighted slowly, very slowly, declining short medium moving average, currently at 108.65, the 50% Fibonacci line for 2023 at 108.64, the mauve colored slowly rising medium moving average, currently 108.50, and the gold colored very slowly rising long moving average, currently 108.35. Now these last two have been the base for the drive higher from last week. So far today, not much, hanging around yesterday's close and just under the 50% Fibonacci line at 109.44. Cable, aka sterling against the US dollar. A respite from the rising market yesterday with a combination of a bearish dark cloud cover pattern, bearish opening black Mariposa, and finally a bearish double. Prices closed right on the dark blue highlighted middle time, currently at 128.12. Of the broken November to December 2023 shallowy bullish shift pitch hawk, and tested down but did not penetrate the previously mentioned general congestion, now support, formed between December 2023 to January 2024 from the 126 area up to the 127.75 area. This overall general congestion had until recently been the key capping overhead cap, so to speak, pressing down on any attempts higher. Overhead, we have the November 2020 low at 128.52, and just above that, the rising, bright red highlighted, July 2021 to date downtrend, currently 128.60. Now this downtrend is one to watch. So far today, a further dip down towards the congestion below, starting at approximately 127.75, but not managing to really pierce it, not just yet. Euro sterling. An immediate countering bullish harami yesterday after the previous session's bearish closing long black Mariposa and second bearish black crow. The market utilized the support of the bright red neckline of the May to August 2022 head and shoulders continuation pattern, currently 84.98. And just like we saw in mid-February, we find ourselves back within the purple highlighted recent small expanding wedge pattern. That's currently 85.24 to 86.06, as well as actually over the dark blue middle time, currently 85.18. And that's of the November to December 2023 bearish shift pitch hawk. Now further overhead, we have the combined December 2022 and 2023 lows at 85.45, 85.47 respectively, which we're testing in a moment. Then the declining short medium moving average, currently 85.66. And the recent congestion running up as far as about 85.75. Whilst below the bright red neckline and its recent associated lows down to 84.96, we have a clear area until the April 2021 low at 84.70. So far today, a continuation higher, with the market utilizing the broken lower purple highlighted trend line as support for a try higher, and looking a bit like a bullish opening white Mariposa right now. US dollar against the Japanese yen. An indecisive spinning top yesterday, as for a second session, the market chose not to test lower onto the support from the combined lesser Fibonacci line at 146.33 and a flatlining long moving average, currently 146.32. Overhead we have both the rising short medium moving average, currently 147.54, and a slowly declining medium moving average, currently 147.65. Now, overall prices are still within two major pitchfork patterns. We have the February 2022 to January 2023 bullish shift pitchfork, highlighted in purple on my daily chart. We're in between the lower time below, currently at 143.94, and the middle time above, currently at 158.02. We're also in between the middle time above, currently 152.09, and the lower time below, currently at 144.82 of the July to December 2023 bullish Andrews pitchfork, which is highlighted in bright red on my daily chart. So far today, well, a further attempt higher, up to test the combination of the medium and short medium moving average. Not piecing it really, but beyond these, we have a fairly clear area up to the low 149 even area. US dollar against the CNH, the offshore Chinese yuan. A bearish open and close black Mariposa, which importantly closed for a second consecutive time below the dark blue highlighted mid-January to date ascending triangle pattern, currently 720.60 to 723.56. Hence, it is perhaps time that I laid out some idea of the potentials for breaking out of such a pattern. Thus, a primary target X is down in the 716.05 zone, with a secondary hard to reach target X1 down in the 710.70 zone. The immediate obstacle in the way is the late February low at 717.97. Then the recent congestion between approximately 714 up to 716 even. Meanwhile, the top side has a lot of resistance in the way, starting with the rising short medium moving average, currently 719.27. Then the May 2020 high at 719.64 and a declining medium moving average, currently 719.83. I can't help thinking this has all been prompted by the unusual contrary weekly key reversals we saw in the Chinese yuan 3 weeks ago. In that time, we had a weekly key reversal up in spot USD CNY, the onshore Chinese yuan, and at the same time, we had a weekly key reversal down in the USD CNY, the onshore Chinese yuan again, but this time in the 1 year NDF. Interestingly, last week saw another weekly key reversal down in the USD CNY 1 year NDF, as well as a fresh weekly key reversal down in the USD CNY 1 month NDF. Now, so far today, another attempt lower, this time pushing through what is a limited support at 717.97. US dollar against the Mexican peso. A bearish black Mariposa as well as a bearish black crow yesterday, effectively the 8th bearish black crow in a row. Prices were effectively capped by the neckline of the February to April 2021 head and shoulders top, currently at 1681.01. But we're also held up by last week's low, which was also the 2024 low at 1675.87. Now further overhead, there is the combination of the highlighted in dark blue middle time, currently at 1690.77, and that's of the December 23 to January 2024 mildly bearish shift pitchfork. As well, and more importantly, I suspect, by the support now turned resistance at 1688.97. This congestion at 1688.97 was formed in mid-December 2015 and more recently featured in mid-August and late December last year. So it has some pedigree. Now looking below, we have some congestion between 1670 even to 1680 even from August last year, as well as the 2023 low at 1662.06. Overall, we are still well within the bearish shift pitchfork highlighted in dark blue on my daily chart. Now, so far today, a small reactionary move back up, but still capped by the neckline.
Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.